At this time, I would like to invite the head of Equity Research for West Africa at Stanbic IBTC to take us through the first presentation of the day. It is titled The Macroeconomic Overview, Reflections and the Road Ahead. Thank you very much. Please let's make welcome Mr. Muiwa Oni for the presentation. A warm round of applause for him, please. Thank you.
Thank you. Good morning, ladies and gentlemen. Let's see if the presentation works. Okay. Or should I point there?
Yeah.
Okay. Yeah, thank you. So for our conversation today, I think the title of the presentation is Reflections and the Road Ahead, looking at the Nigerian economy. And so whilst we talk through that, we'll look at a few key themes. One, look at global themes. So what's driving how the world is evolving right now, because there seems to be so much going on. We'll talk through Africa themes as well. So how those global themes are driving economic activity on the continent. Will feed through Nigeria, outlook on GDP and expectations on that, and talk through monetary policy and inflation, how the central bank is reacting to the inflationary environment. We'll also discuss foreign exchange market development. There seems to be a lot going on there. We're also trying to understand how an outlook for the currency, particularly when you look at the material gap between the official and the parallel market. Then we'll also talk through fiscal development and just briefly on politics as well and summarize. And for global themes, there seem to be 5 key themes driving global outlook currently. So within China, there's still COVID tolerance. So whilst most of the world seem to be going past the pandemic, China is still trying to address restrictions. So there seem to be looser and easier restrictions now, but when one compares it to other parts of the world, it's still there, and it's having negative impact on supply chain across the world and also having some impact on prices of goods and services as well. I think a key theme as well that seemed to have changed the direction for 2022 in particular, and I guess how we look at the world over the next few years, is the tensions between Russia and Ukraine. So that war, whilst one is still trying to understand when it ends, it's having negative impact on the prices of goods and services, primarily energy prices, but also food prices as well. And it's creating some concern of food security on some parts of the world, Africa in particular. And the high energy prices, high food prices seem to be escalating inflation. So the level of inflation we've seen in recent times, we haven't seen in 40 years. UK, the US, the European continent in general, seeing high inflation levels. On the African continent as well, we've seen inflationary levels stay high. And because of that high inflation, monetary policy authorities are having to raise interest rates to address this difficult inflationary environment. And so we're seeing inflation pick up materially, seeing monetary policy rates pick up materially across the continent and across the world as well. So developed central banks have raised rates considerably, cost of funding have increased, and so dollar liquidity that used to be high a couple of years ago seemed to have tightened, and that's having negative impact on growth of companies, and there's the risk of not just a global slowdown but also a recession as well. Within Africa, I think the continent seems to be in a very difficult place, and I think a good title for that would be that Africa is living on the edge. And so when you look at inflation, inflation is at a considerably high level across the continent. Nigeria, we haven't seen this type of inflation that we're seeing in recent times, slowing growth as well. So whilst expectations was that there will be stronger growth recovery as we go past the pandemic, there's the concern of growth slowing down now because of high inflation and also because of what's happening globally. And the high inflationary environment is leading to food insecurity as well. So if one thinks about the high prices in grains like wheat, that's having negative impact on affordability, and parts of the continent is at risk of food insecurity. I think the numbers presented by the IMF is about 123 million people at the risk of that. And that as well is driving some level of social tension. And so within Nigeria, we're having conflicts between the farmers and herdsmen, and you're also having challenges across the continent as well, which seem to be a reflection of this very much more difficult environment. And the high rate is leading to concern and debt sustainability for a number of countries. So Ghana, for example, is having to engage with the IMF to restructure some of its loans. Zambia recently got a deal to also restructure its loans as well. So within Nigeria, and when one looks at growth expectations for next year, we still expect growth rate of about 3.2% for next year, 3.3% for next year, at similar levels at which we've seen so far this year. For this year, expectations is for growth to settle at 3.2%. And the key drivers of growth has been the non-oil sector. So sectors like telecoms, other service sectors like trade have been key drivers of the recovery we've seen in the economy so far. But the oil and gas sector has been contracting. So for the past couple of quarters, it's been in negative territory. When you listen to the media, hear about our production levels being at considerable low levels we haven't seen for decades now. And that's having a negative impact on government revenues as well. But in terms of growth expectations, our view going into next year is that the non-oil sector continues to drive growth. And so even though we have a growth expectation of 3.3% next year, we see a number of downside risks to that expectation. We think high inflation creates a risk to that inflation. There are concerns about insecurity as well and how that could distort economic activity in some parts of the country. If one looks at likely upside, I think the oil and gas sector, one would say, could be an upside. So if you look at the trend in the sector, it's continued to decline. Over 10 years ago, the oil and gas sector accounted for almost 60% of GDP. Now it's half of that. And when one listens to government agencies like the Ministry of Petroleum or the NNPC, I think there's that view that we could see some form of recovery in oil production, given some of the activities they've tried to do to stem some of the leakages and insecurity and challenges there. And so if one sees oil production move back to about 1.6 to 1.7 million barrels per day compared to the 1 million barrel per day level, that could also drive growth higher than expectations. But I guess one will still look to see how that happens. From a monetary policy standpoint, we've seen the central bank raise rates considerably over the past couple of monetary policy committee meetings. So there's been a 400 basis points increase in rates. So monetary policy rate is now 15.5%. And expectations is that we could see rates continue to rise primarily because of inflation. So inflation figures for October was released yesterday. And we saw inflation go up to 21.09%, just showing that we're still seeing a rising trend in inflation. Even though when one looks at the month-on-month trend, there seems to be some easing. But if you consider that food inflation has been elevated and the floods could keep food inflation elevated, one could see that as a likely upside risk to inflation. So whilst for next year, we see inflation averaging around 17%, so about 16.7%. One could argue that if we're not able to address and drive some recovery for food output, given the likely challenges from the floods, that could keep food inflation elevated, and inflation could go above that expected level. For this year, we expect inflation to average around 19%. But other factors could also drive inflation higher than expected. So we could see likely deregulation in petrol prices also drive up prices. I think recently the NNPC was talking about the 170 naira per litre being unsustainable, saying 500 naira per litre is a likely figure. So if that happens, for example, we could also see inflation go up from there. Electricity tariff reviews as well could drive up inflation. I think for the exchange rate environment, if one looks at the central bank, I think it's clear that the central bank's position is still to continue to manage and continue a demand management approach to FX. And so if you consider items that the central bank has excluded from official foreign exchange, all those in our view continues to drive some of the tension we see in the FX market. And also because the central bank seem to be conscious of the rate as well, and there seem to be some level of or shall I say the central bank seem to be have a preference of a gradual easing of the currency and deregulation of the appreciation of the currency. We don't see that change, but our view as well is that that also doesn't necessarily solve the liquidity crisis we're seeing right now in that market. And so whilst the central bank has taken some steps to drive supply, like the introduction of the RT200 policy, we think those are longer term steps and might not be able to address some of the short-term shocks and challenges we see right now. And so if we look at the trend in the I and E window, which is more or less the interbank FX market, supply into that market has collapsed. So since the pandemic, so since March 2020, we haven't seen supply recover to those levels. And in terms of the players in that market as well, the central bank has really been the primary supplier of FX to that market. Foreign portfolio investors that historically used to be the primary drivers of supply into the market have since reduced or been on their way out, just because it's been difficult to take money out of that market. And so it's also challenge, it will be difficult to see how they'll be willing to come back into the market unless we see some flexibility. And also because exports proceeds from oil continue to decline, the central bank's ability to maintain the FX at the current levels they seem to prefer is also difficult as well. So whilst reserves haven't necessarily declined as much, part of the reasons why is because there's been some backlog and that backlog seemed to also be having negative impact on businesses as well. So I suppose as operators and businessmen, given the dependence on FX to the real estate industry in particular, those in our view continue to make that business difficult to operate. And if we look at this chart here, you see foreign portfolio holdings of investors in the Nigerian market stay at considerably low levels. And because the liquidity in the FX market has been thin, willingness for investors to bring in funds have also waned considerably. And when we engage with these investors, it's clear that they want to see some level of flexibility in that market. And a number of them continue to utilize some dual listed names. So there's few stocks listed on the Nigerian Stock Exchange and the London Stock Exchange that investors have tried to use to take money out. And the implied rates of exchange on these stocks have been quite elevated, even higher than the parallel market rates. Just showing you that for investors, they are more concerned about access than the rate per se. And unless we see some considerable adjustments in the FX market, we'll continue to experience these shocks. From the fiscal standpoint, I think there's increasingly that question of debt sustainability for the country. And I think part of the reasons why that is rising is because of our revenue challenges. And so if one looks at the country from a debt to GDP standpoint, one can argue that our debt looks sustainable. So even when one adds the overdraft from central bank, for example, debt to GDP is still below 40%. And normally, country starts getting worried when it's at 60% levels. But when you look at debt service to revenue ratio, it's far more elevated. And it's because our revenues, particularly on the oil side, seem to have halved. And so if there's no conscious effort to drive that revenue line higher, we'll continue to struggle and we'll literally be using all our revenues to service debt, and it becomes far more difficult and unsustainable. So if you look at the budget for 2023, the deficit is north of 10 trillion naira. And what that means as well is that we'd have to fund that with borrowings. And there clearly needs to be a way for government to pick up revenues. And so whilst there's that conscious effort to diversify away from oil, I think there's the reality as well that there's a lot we need to do on the oil and gas sector to get that line going as well. And so it's not so much of saying diversify away from oil, but we also need to be serious on the oil production front. I think on politics, and just quickly on that, I think that there seems to be some consensus that if one looks at the three main candidates and even just have a brief glance at their manifestos, I think there's that acknowledgement of the challenges the current country seems to be facing. I guess there's a question of how, or the political will for some of the politicians to address these issues and how much of these promises will be transferred to reality. But also, if one looks at the candidates as well, I think there's some comfort that there's a better grasp of the importance of the private sector and the business environment relative to the current administration. And so one could, I guess there's that likelihood that we could see some more positive reforms that could get the country away from the more difficult environment that we're in currently. And so to summarize and to end my presentation, expectations for next year is for GDP growth of 3.3%, even though we highlight some downside risk to that outlook. We also do expect inflation to average around 16.7%, so roughly 17%. On the currency side, we still think the central bank continues to gradually depreciate the currency and see currency settling around 520 for next year. So I'll pause here. Thank you.
Thank you very much. Can we one more time applaud Mr. Muyiwa Oni? Thank you very much. So he's a top-rated analyst by Financial Mail. So if we allow him, he could go on and on. But thank you for your very detailed presentation.